So we've seen how commercial banks can create additional money in the economy through this process called fractional reserving. And if you want to see what $10,000 looks like in $100 bills, there it is. And $100,000 in $100 bills is a small pile of money. $1 million in $100 bills is basically about a meter cubed. $1 billion, quite a bit bigger. And $1 trillion, well, $1 trillion in $100 bills is effectively going to cover a US football field to the height of 2 meters. That's quite a lot of money. So, what's the debt of the United States of America? Well, you might be saying, well, I have no idea. Why should I know that? Well, there's no reason why you should. But if you look at the US debt clock, which is available online, you will see that at the time of recording this video, by the time you watch it, it will have increased. It was $27.6 trillion. $27.6 trillion. That's a huge amount of money. That's enough money in $100 bills to cover 27.5 US football fields to the height of 2 meters. It's a figure so large that if you were to repay the debt of the United States at the rate of $1 per second, it would take you more than 500,000 years, which is an academic number because the debt is increasing at a rate of greater than $1 per second. That's a lot of money. So who owns all that US debt? Who's the biggest lender to the US? You might be thinking, I know the answer to that one, Ted. It's China. Well, you'd nearly be right. China's number 2 on the list. But who's at number 1? It's in actual fact an institution represented by Paul Volcker, Alan Greenspan, Ben Bernanke, Janet Yellen, Jerome Powell. It's not them who own the debt, it's the institution they work for or used to work for, which is of course the US Federal Reserve. That's the Central Bank of America. So while here in the UK we have the Bank of England, in America it's the Bank of America, the US Federal Reserve, the central bank. Now, where, and they own about a quarter of that debt, okay, so about $7 trillion worth of US debt is owned by the US central bank. The US central bank has lent the money to the US government. So where did the US central bank, the Federal Reserve, get the money from in order to lend it to the US government? They didn't raise taxes because they're not allowed to raise taxes. That's the government who raises taxes. The answer, funnily enough, will appear in the game of Monopoly. Now, Monopoly, invented in 1903, I believe, or 1933 by Lizzie Phillips to expose the iniquity of the capitalist system. But more importantly, the next time you play a game of Monopoly, get hold of the rule book. Because in the rule book, you will see a statement something like this. It says the bank never goes broke. If the bank runs out of money, it may issue as much as is needed by writing on any ordinary paper. That's from the rules of Monopoly, and that is another word for quantitative easing, effectively money printing. Now, it's not physical printing. They don't get the printing presses that actually physically print. They can, but this is an increasingly smaller part of our economy. So what they do is they just create money electronically. Okay, so if you think about it, it's a bit like you logging onto your bank statement and then just moving the decimal place a few zeros to the right, and suddenly you've got more money in your bank. Now, you're obviously not allowed to do that. If you try it, you'll go to jail. But if you're the central bank, you are allowed to do this. And suddenly the central banks are able to print money. Now, the first big piece of money printing happened in response to the global financial crisis. So as Lehman Brothers was collapsing, banks were going bust, nobody was lending to each other, it was causing absolute mayhem. The central banks printed money, they injected that money into the kind of the financial system, the financial heartache. And you may remember it was called a liquidity crisis, and a liquidity crisis is when there is no cash. They basically flooded the financial markets with money in order to keep the banks open, to keep people lending to each other, and to allow organizations to carry on doing business. Okay. And in response to the financial crisis, here we see on this chart the response from the Federal Reserve in red, the Bank of England in blue, the Bank of Japan is in green, that's a slightly different story, and the European Central Bank, the ECB, in yellow. All of them started to print money. So when they talk about central banks' balance sheets and their assets, effectively they're buying the debt. Don't forget, if I lend you money, your debt is my asset. So if I'm a central bank and you're an impoverished government, effectively what I do is I create this money out of thin air and then I lend it to you and you owe it to me. So it's my asset, it's your liability. Don't worry, I'm not going to ask for it back. In fact, if you want to pay interest, I'll just cancel the interest as well. So it's free money for you, which is a pretty good idea when you think about it. Okay, and so all of the central banks have been doing this in response to the global financial crisis. Very, very important that. Okay. So here we are now, and we're recording this in early 2021 as we're starting to hopefully get to the end of the pandemic of coronavirus, COVID-19. And in response to the coronavirus, the central banks also have been printing money. So what we see here from this chart is from 2007 to 2021, the main central banks, and in this case we're going to list the Federal Reserve, the European Central Bank, the Bank of Japan, and the People's Bank of China, which is obviously a very, very big central bank. So the Bank of England unfortunately doesn't quite make it onto the table in this one because they're not big enough. So these are the major central banks, and all of them have been printing money. Now what's interesting about this chart is pretty much consistently there's a big spike around 2007, 8, 9 when they start printing money to deal with the first financial crisis, and then ever since then they've just been quietly printing money in the background. So they've still been printing money up until 2018, 2019, and then suddenly 2019, 2020 we get the financial crisis with the pandemic, and suddenly they just print money like it's going out of fashion. Look at the red line. The red line finishes at about 7 trillion. So we can see from the red line that the US Federal Reserve has lent $7 trillion to the US government. So as of today, about a quarter of the 28 trillion, so 7 out of 28, that's about 25%, has been lent by the US central bank that has created the money, bing, out of thin air. And if we add all of those together, what we see is that since 2007 to 2020, that the amount of debt, amount of extra money that's been created and pumped into the economy is a total of $23 trillion. That's a huge amount of money. That's a wall of money flooding into the economy. And if we remind ourselves, don't forget we said that if you increase the amount of money in the economy and the velocity stays constant, the Q also stays constant because that's our capacity to produce goods and services. Therefore, it has an inflationary effect. But we haven't experienced inflation. And so there's a lot of economists scratching their heads and thinking, hold on a sec, maybe this is no longer valid. Maybe this equation doesn't hold true anymore. Maybe we've entered into a new era. And maybe this is where modern monetary theory will work. And modern monetary theory, sometimes referred to as the magic money tree, basically says that you can print money from the central bank, you can give it to the government to spend how they see fit, and it's not going to cause inflation. So in the global financial crisis, they were printing money, they were giving it to the government was giving it to the banks. The government was actually injecting it into the banks and saying to the banks, you lend this out into the economy. But for the pandemic, for the coronavirus, they actually bypassed the banks. Think about the schemes that the governments around the world have been running, giving money to companies, giving money to individuals. They've actually been just crediting money straight into the banks of individuals. This is what's known as helicopter money. And they're all doing it, and they're saying, yes, but we can do it because it no longer has this inflationary effect, which is fantastic. So if you start to look at what's been happening in terms of this quantitative easing and what you start thinking is going to happen in the future, the governments are starting to believe that you can print money, you can inject it into the economy, and it's not going to create any inflation. Why not? Because we've been doing it for over 10 years and it hasn't happened yet.